Thank you for tuning in. This is going to be a great panel of first name CEOs and co-founders. We had a little chat backstage. But definitely, if you've been on a journey of growth, as we all have, we know it's arduous, it's exciting, there's bumpy roads, there's all sorts of things we need to navigate along the way. These people seemingly have done it successfully, so we'll have to ask them a lot of really great questions and have a fun time while doing so. So without further ado, I'd like to introduce Stefania, Dries, and Ash, all amazing CEOs and co-founders, which is interesting because those are two different functions. But what I want to start off with, just let's do a little bit of nostalgia. I'm curious as to what was your first job, and how did that experience inform things that you do today? For me, I was a caddy. And so I caddied at the #1 golf course in Michigan, and I learned a lot about what people with money do on golf courses. So, and I haven't been on one in my career yet, but I will. It's coming up. But Stefania, I'll start with you.
I honestly can't remember which was first. I was working in an art gallery doing like being the gopher and doing some of the accounting, though I knew nothing about accounting. And I saw what rich people did when they came in to buy art and really just wanted to find a place to spend an hour that was, because they were, I don't know, scared or bored of the rest of their lives. I also worked with, and I can't remember if this was first, I worked for my father's computer company. And I programmed. I was 12 or 13, and I programmed. And I mowed the lawn outside their building.
Wow.
And that's when I thought, oh, computers is fun. I'll stick with that. And I didn't work in art galleries ever again, but I worked for computer companies most of my life since then.
I would say that what you do is an art. So there you go.
There you go.
Ash, how about you?
My first job was actually as a systems and software designer at a company that used to be vertically integrated. Remember those days when companies used to build their silicon, their operating system, their hardware, their software. And I was one of those guys who used to build the processors and the operating systems. And within a period of 4 years, that company went from being a fully integrated system to be completely disrupted by open systems. And I think that's one lesson I learned throughout the process is don't be afraid of change. Number one, it happens. 2, it creates opportunities. And 3, you actually have an opportunity to create the change itself. I think that notion that change is something you absolutely embrace because you cannot be too comfortable, and it actually is something you embrace is still something that I live with.
All right. And Dries.
Yeah, I guess like Stefania, my first job was actually helping my dad with a programming project. He was a medical doctor, still is a medical doctor, and he was using papers for everything back in the day, and he wanted me to digitize some of his process, I guess. But I didn't get paid for that. That was just a summer spent helping him with that. But so you got paid, yeah, you were better off.
Yeah.
But my first paid job, I was, I think, 16, and I was flipping burgers in McDonald's. And I learned about hard work. It was hard work. And it inspired me to go to college.
That's amazing.
Yeah.
So look, all three of you have CEO and founder or co-founder in many of your titles. I'm curious as to just what the journey has been like going from founder to CEO. Right? Founder is like we're in the trenches. It's very gritty. The growth becomes you metamorphosize, if I can make up a word, into a whole new person. I'll go back to you, Stefania, for that sort of like that loop-de-loop roller coaster of a journey. And what did you have to like learn along the way? And what was maybe like the biggest lesson you learned in that experience?
The biggest lesson was something that was articulated to me by someone on my board in my first company. He said, the more successful you get, the more you have to share control. And you need to understand that that is a valuable thing. You're not losing, you're gaining by doing that. And that has been true. I've learned that it's true. Sometimes it's hard to let something go, but the more I let go, the more I put people who are better at their specialty function into their roles, the better the company has done. I mean, I'm a generalist. I'm like a mile wide and an inch deep. So the more I could hire people who were a mile deep and an inch wide and say, that's yours now, that's yours now, that's yours now, the better off we were. So share control.
Yeah.
And view it as a plus.
Oh yeah, no, and that's also like trust is a huge part of that, right? Like just it's that gut feeling of trust and ownership. Dries, how about you?
My answer is actually exactly the same. I know it sounds kind of cheesy, but I had to learn everything. I mean, I didn't know anything about how to run a company, so I had to learn to trust people around me and delegate and share control, as Stefania said, and you have to learn it or you'll kind of drown. You know what I mean? Like things are growing, they're scaling. You constantly have to find ways to make yourself more productive. And the only way to do that is by learning to hire great people, trust great people to do their job, and scale the business that way. So that was really the key to success in many ways. It's all about having the right people in the company, in the right seats, and trusting them to do a good job. The other part of that is if they don't do a good job, you obviously have to manage that. And so the people aspect, I think in general, has been one of the most important learnings, both the good parts and the bad parts of that.
Absolutely. Ash?
I think it's pretty similar. I think it's learning constantly. The scope of what you can impact changes, and you evolve from let me do that to how can I help you, right? It's a very fundamental shift in how you think about going from a person who is involved in pretty much everything to a person who is basically sitting there becoming a servant of your team. And I think that's a huge change. It takes a while to understand. It takes a while to internalize.
We also touched on this concept of I don't know, just the ability to be able to pivot and grow and like introduce new products and services, and the decision tree by which you have to climb up is probably an arduous task. There's 100 things you could do. There's probably 2 that you should do. How do you discern that difference along the way? Maybe give an example.
I can start. So maybe for context, when we started Acquia, we had like 1 product. Today we have over 12 products. And the way we went about it, I think it starts with having like a big vision, like a multi-decade vision for many, many years. And I think it will take us another 10 years. Acquia is 14 or so years old. I think it will take us another decade to get to that vision. But you brainstorm, like here's 30 things we could do that fit into that vision. But obviously we can't make 30 bets, if you will. We can do 30 different things. We can make 2 or 3 bets. And so we filter these big decisions down to 2 or 3 things. And the way we do it nowadays is we ask the question, what was true 10 years ago? What is true today? And what will be true 10 years from now? And the answers to those questions are almost always, super boring. It's never the shiny, disruptive answer, to be quite honest. But because they're boring, they're always relatively safe bets to make as a company. So, for example, security, privacy, compliance, that was a problem 10 years ago. It's a bigger problem today, and we believe it will be a bigger problem 10 years from now. It's kind of a growing problem and will continue to grow. So that's, like, for example, an area that we would focus on. But we would never answer that question, what is true today and will be true 10 years from now, or what's true 10 years ago today and 10 years from now with something like blockchain or virtual reality. Even though these are amazing things to focus on, I think we go for the fairly boring things. And because of that, the things that we bet on, the decisions that we make are relatively safe but boring. And so that process we can use to filter maybe 30 ideas down to 10 ideas, but ultimately we need to go to 2. So for the last step, we kind of involve our customers, and we ask them, what would you most likely buy from us? What feels natural and logical to you to buy from us versus from another company? So we start with our own vision. From our vision, we go to strategy by focusing on relatively safe bets, if you will. And then for the final step, we consult our customers. You know, we want to know what our customers want to buy from us. So that's kind of how we go about it.
That's great. Stefania, do the same rules apply when it comes to catering?
A lot of the same rules apply. I would add another dimension, which is when you're figuring out what your customers, or whatever your customers have said they'll buy from you, or what you think they would buy from you next, is still the build versus buy or partner decision. And there we use this kind of rules that other people use for that, like, is it a core competency? Is it really central to what you're doing? Or is it something that is important but not central? It's not a core competency. And we also look at how much have other people who do something like this spent. So, for example, we have a delivery capability. So my company helps people order food for business meetings. We are the food for work at work company. And delivery is an important part of that. So we were contemplating whether we would create, or ezCater, would we create Easy Drive, Easy Uber, Easy Lyft? And we were like, they've spent billions and billions of dollars. Let's do this by partnership. We don't have billions of dollars to do this as a sideline. So you look at what's core and what kind of money is involved to do a good job of it as you make your decisions, because everything you say no to, the no's are as important as the yeses.
I'm a big fan of partnerships. You know, like I operate from the vantage point of a lazy person. I'm like, well, who else can do it, right? Like, and that will help. You know, you're guilty by association also with the partners that you choose to work with. Ash, I want to flip this a little bit for you, because I want to talk about like a North Star. Obviously, you had an exit recently, and that was successful. But you know, kind of the decision tree that goes toward that goal, or was that even the goal along the way? And then how did you navigate that path?
Yeah, I think we started about 10 years ago, like almost 11 years ago, and the environment we got into was very, very different. It was an on-prem, I mean, Amazon, AWS wasn't even there when we started. 2 years after we got started was when AWS first came out with in fact, the first user conference in Boston. And the market has dramatically changed, and we had evolved with it, but we were still in that phase of being this large enterprise software company selling to the biggest, 3,000 odd largest of the enterprise organizations. And you could see the writing on the wall. If you are an infrastructure company, if you are a company that is building stuff for large enterprises, you had to be going to be working for one of these three companies. That's where it was pretty clear where all of our customers were asking. We made the shift, and I think it was that shift actually got Google interested to the point where the acquisition happened. But the tougher part about decision tree is frankly acknowledging that there's a shift that's happened, and you take the gut-wrenching decision of making those changes. And I'm sure Stefania went through a lot more of those in the last 1 year of the painful things that she had to do. And frankly, I think that decision tree is more interesting. The one that is normal about everything being well and all the hard things you have to choose between, is this better than the other, is easier. The one that is really tough is, okay, when you're in deep trouble, what does the decision tree look like? What's less worse?
Well, that was another question I had, just in terms of like, was there ever a moment in either of your businesses where you thought it was going to be over, and you're like, like, what do you do? Like, what when you hit that oh shit moment, you're like, I'm sure that it's not even a moment; it's a series of moments over time where you're like, oh my gosh. Yeah. So, Stefania, I'll go to you because you nodded the hardest on that one.
We have a session called Legends and Lore, where we talk about the early history of the company. And so the new employees hear it so that they don't feel different from the people who have been around since the early days. one of the chapters in that is that Friday afternoon that I'm sitting, the company was built initially out of my house because my co-founder's house was much smaller and I had parking and he didn't. And so I was like, this is the criterion we're using, parking spaces. So we're sitting on my deck on a Friday afternoon. I have my feet up on the railing and he's pacing around and we're like, it's going too slow. It's just going too slow. I said, I hate to say this, but I think I have to get a job. And we're like, no, this is the worst thing. Don't do that. So we we did what we do. We went to the data. We didn't even know what we were looking for, but we just sort of hunted around through all the history of everything that had happened, all the orders we had placed, all the interactions we'd had, all the history we had, and just we weren't sure what we were looking for. But in the course of doing that, we found something which was like an aha moment, and we didn't pivot. We found an operational, something that gave us an operational leap forward. And that was a Friday afternoon. And we said, wow, let's think about that over the weekend. On Monday morning, as Prisco Rogers, my co-founder, shows up, he's walking up the stairs to the place where we're working in my house. And just as the phone rings, I'm calling out to him and I say, hey, I think we should do that thing. And he says, I already started programming it. So we had, it was so clearly the right thing. And it was, in hindsight, it was brilliant. But that was a moment where literally we said, we should hang it up. It's going too slow.
Too slow. I mean, look, that is the hardest part, right? Sticking to your guns. Like, do you stick to your guns or do you move on?
Or do you move on? Yeah.
Dries, how about you?
Yeah, same. Like our original business model was, let's say, challenged. Actually, the original idea was to provide support for Drupal, and that was going very slow. And something special happened, I guess. Amazon announced AWS, and they only had 2 services at the time, and we literally kind of bet the farm and helped, pioneer a new business model for open source to deliver, open source or Drupal in the cloud. And that was a big decision for us, kind of a make it or break it decision.
Yeah.
Another quick example, maybe in a different category, is actually customers. Like, we have been faced with like these huge customers, so much risk. I won't name names here, but where we said, if we accept this customer, it will either make or break the company. And every time we've said yes, let's do it. But these were very scary decisions, given the, what was at stake in terms of the customer visibility. So you have to make those bets and manage through them.
Ash, I'm liking the smirk on your face.
I know. I think Actifio was my third company, but I can. So between the second and third, that wasn't existential problem wasn't the issue. But the first one, I can tell you, and it reminds me of something that one of my favorite books, and I'm sure probably many of us have read that over and over again. Ben Horowitz's, The Hard Thing About Hard Things, right? This is just an absolute Bible that we keep going back to. But one reminded me of one thing he said. Is like, oh yeah, being a CEO of a startup, I slept like a baby. I would wake up every 2 hours screaming. Basically what it is, right? And my first company was in '97, and frankly, that was the time when I was in Colorado, and I would tell this, I didn't know something called venture capital existed, right? But so we were completely self-funding it, and there were times when you would sit there, and Friday was coming up, and you didn't have payroll, and you would worry about what that meant. And frankly, but that was, like I said, at a time in my life when I did not know VCs existed, and it's every entrepreneur's challenge, right? I mean, it's something that really separates out. In fact, this is one lesson for all of us. I think Stefania's story is perfect. You get through, you're creative, you find a way out of it. And Ben's book is just incredible in terms of how many times he's gone through that one single company.
Yeah. Well, a big part of the difficult times is also communicating to your teams, whether it's just you and a partner at one point, or if it's, you got thousands of employees. communicating, managing expectation, answering to the VCs that you have. What is your communication style, when it comes to empowering people, keeping them informed, motivated, even when it might be a little bit more difficult? Stefania, I'll start with you specifically because June 2020 was a very difficult time for you. As the world shuts down and you're catering in offices, nobody's going in offices anymore. And, somehow you found a way out. But in that process, I'm sure there was some very strong and stark communication that had to happen.
Yeah, that's really true. It was actually March of 2020, and I realized I wasn't sure what I'd done in another life, but suddenly the core business case that we existed for had become illegal overnight, right? Suddenly everybody was forbidden to go to a workplace. If you didn't have to, you couldn't go. Like, that's us. So we are a very transparent company. One of the 9 ingredients in our culture recipe is trust in transparency. We tell everybody just about everything. In fact, some people say our company meetings are the best. They're like going to MBA school because we talk about everything about how you build the business. So it was not a surprise that anything was going wrong because everybody sees all the numbers and the phones aren't ringing or they're ringing to cancel orders. So we just continued to communicate with the same level of transparency, but much higher frequency because we were all trying to figure out what was going on. And 2 or 3 weeks in, it started to become clear that we were going to have to do some layoffs. And we said that in company meetings. People were like, "Are we going to get laid off?" And I said, at first I said, "I don't know." I didn't say, "Oh, don't worry, trust me, you're not." I said, "I don't know." And I got a lot of kudos for just saying, "I don't know," instead of offering some false assurances. And then after about 3 weeks, we got to where people said, "Can you just lay me off? Can you just lay me off and get it over with?" And we did this by email and in company meetings. I remember writing an email in which I said, "Listen, we don't know yet, because remember the beginning of the PPP programs, and I think they even had other initials at the beginning. The government was doing the same scramble. I mean, it's amazing what they came up with in a very short time. And they were doing the same scramble to try to find ways to help people. And so I said, look, if you can be patient for days or maybe weeks, not months, we will know better. Like if there are alternatives, if there's going to be better unemployment, help assistance, unemployment assistance for people who do get laid off, we would be fools to lay off more people than we have to because we just want to get it over with. So can you be patient?" And everybody was like, "Yep, you're right. That makes sense." And finally there was a day, April 7th. I sent an email that morning at 6 a.m. that said, "Today we know who's going to go. We've had to make the decisions. Sit by your phones, people." And we spoke to every single person. We spoke to them. And we had here's what's going on. Are you? And very, very, I think everybody walked out with, "I get it. I get it. Tell the truth and tell as much truth as you possibly can."
I love it. Tell the truth. That's super powerful. Dries, everybody wants to know if you still eat McDonald's. At least 3 times in the chat. I'm like, do you still eat McDonald's?
I prefer Shake Shack nowadays, but occasionally I eat at McDonald's, but it's once every few years, I would say.
I had a choice.
All right.
We talked earlier about just the competitive set, right? Like who else is out there doing what you do? And I think just as an organization or as a founder, generally with all of you, but specifically in your case, Dries, you have an open source platform, and you talked a little bit about is this a good or a bad? And how do you navigate that? How do you outserve your competition? So how did you think about the business of growth and sort of what you do for Drupal? Especially as it pertains to what a competitor might offer, and not thinking.
Yeah. Well, most of our competitors are proprietary software companies, so the opposite of us. And I think the reason we've been successful is, because we have a great product. I think to win, you have to have a product that's, fundamentally better, not just a little bit better, but a lot better. And I think open source is fundamentally better than proprietary software. I mean, it's more open, it's less risky, it's more flexible, it innovates faster. We have more than 10,000 people contributing code every year. That's a pretty powerful differentiator compared to our competitors. And so, it's kind of a super truth, if you will. I don't know if that's a term, but and I think the best evidence is developers, they don't wake up in the morning thinking, what proprietary software will I buy today to go solve my problem? They don't. They wake up and they think, what open source project can I leverage to solve my problem? I think it shows that open source is just better. And because of that, we've been able to grow so fast. Now, open source also has some downsides, as you alluded to. It's for perceived downsides, maybe. Like people think, maybe it's not as secure, maybe it's not as scalable. And those perceived downsides is actually Acquia's opportunity. When you have a large Drupal site doing 200 million visitors a month or whatever, you want to be absolutely sure that site will be scalable and secure and all of these things. And that's what we guarantee to our customers, right? So as a customer, you kind of get the best of both worlds. You get all the advantages of open source innovation, the openness, the flexibility, combined with all of the benefits of working with a traditional software vendor or software company that helps you, kind of feel secure and safe about your decision. So I don't know if that answers your question, Chris, but for us, that's kind of the reason why. It starts with having a great product and then making customers successful,
Yeah,
with the product. So I think we've been able to navigate that quite well for years.
Ash, can you talk to me about speed? Just the idea of how fast you want to or should grow or shouldn't, and how do you know the difference and make the decision on just the speed of growth?
Yeah. I guess you never grow fast enough. That's the first thing. Because if you were, and the best example I give you is the first lesson I learned from the first company I started in '97. It was one of those things where, like I told you, pretty naive. Started a company because I was fundamentally bored in the job I was in. When I told my wife, "Hey, look, I really hate getting up on Monday mornings." And it was one of those things. A bunch of us got together, came up with something we thought was interesting. We were in Wichita, Kansas, the capital of high tech, and decided we're going to go start something new. And within 2 years, now thankfully the company got acquired, but it was a lesson for me that when you go after very small markets, because there's three of us, we were engineers, we thought, hey, this is cool, let's go build something. And it was a very small market. And when the market is small, when you get to the point where you think the growth you are at is good enough, I think you're in trouble. That's when you better find a way to exit fast. Or it's a great lesson I learned when a second company of mine got acquired by HP. There was a gentleman named Vijay who used to run the printer business, the biggest business for HP.
Yeah.
And the CEO at that time, CEO was Mark Hurd, and he would tell Vijay, he owned 80% of the market share, 80% of the printer market share, right? And he would just, come into the quarterly business review and say, Mark, I got nothing else to do. I got no more market. And Mark would tell him, hey, look, 3 principles. Number 1, if you are in the ditch, get out of the ditch. First one. That's for the rest of us who are in trouble. If you are winning, go dominate the business. And if you're dominating the business, find another market. Don't tell me you're done. So there's never enough growth. There's never enough growth. Now, the question really comes back to, can you bring the team along with you to sustain that growth? The growth itself, the targets are not the problem. The problem is, can you bring the rest of the company with you, that you don't create this massive backlog of debt whether it's on the customer sat or tech or just morale, because employees know, right, when things are going well, despite showing big numbers. It's seen on the backside. So
absolutely,
yeah. So I think that's to answer your question. There's never enough growth, but I think the best growth is the one that the rest of the company can really carry through
and get out of the ditch. Son of a
Absolutely.
ditch.
Absolutely. It's about the pitch. It is about the pitch. And then I want to answer one more thing that Stefania was mentioning, right? In the previous question, you were asking about communication style. And the one I just like to use a framework that we used. I would express what she was talking about as authentically optimistic. Right? You got to be authentic, but you got to be an optimist. And there's a framework we use called Stockdale paradox. I don't know if you ever heard of that one.
No, I personally haven't. I'm not that smart.
Yeah, Jim Stockdale was the vice presidential candidate, Vietnam POW, and he had a very interesting paradox, which is basically that you acknowledge the reality of now, number one, and have complete faith that you will prevail in the end.
Yeah.
And they have to be both the sentences. It cannot be one or the other. You cannot just acknowledge that trouble you're in now, then you'll go into depression. You cannot have faith, blind faith, that is called delusion. Somewhere between the two, that framework is very, very important. And we used to use that all the time. And whether it is, ticked off customer or, a company under stress.
Yeah. I love that. I kind of refer to it as relentless optimism. It's just like no matter what, and it's also a life lesson, right? We forget all the things that we've been through in our personal lives and our business journeys, the times that we failed and got back up again, and then you experience this new set of circumstances, and you're like, oh no, but you have that muscle.
Yeah. And
I have some questions to ask you guys. Oh, go ahead, Ash.
No, I was just saying what Stefania talked about was authentic, right? It is Absolutely. Not made up. She's not saying anything that she doesn't believe in.
Yeah.
She said what she believes in, and yet she's got an optimistic message, and that is so huge because people can see through. People are not naive.
Some of our audience has some amazing questions for you guys, so I'm going to go to that, and I'm going to start with Darren Douglas. So thank you, Darren, for your question. Can you talk about when you landed on the business model that got you to mass adoption? I think that's just a great sort of thing. And more so, just when did you recognize that you were onto something, right? Like, I think sometimes your hunch becomes proof positive. And so maybe, Stefania, I'll start with you because I feel like catering seems like, okay, like on the surface. What becomes special about that, and how do you get that to critical mass?
Yeah. So, I mean, right, we don't cook. I don't slice, I don't dice, I don't grind.
Your best
We're a middle person. We're the middleman, and I'm proud of it. It's awesome. We're a marketplace. We have 80,000 restaurants and caterers around the United States that we can send your order to. And you enter an order anywhere. You enter a request for food to be delivered anywhere in the United States, and we will show you all the right caterers and restaurants that would deliver there. Then you can place your order. And at the beginning, we didn't know how to build a marketplace. It turns out it was a two-sided marketplace. You have the supply side and the demand side. And it turns out, I'm here to tell you, if you're going to build a two-sided marketplace, build the supply. And if you do a good job of that and you have a good experience for people to enter their demands, you have a shot. If you are actually solving a problem that people have, you will probably be successful. But we didn't know this. We were figuring it out. We were doing supply, we were doing demand and supply, demand. We kept going back and forth. And at one point, we still had a couple hundred customers that used us quite regularly. And one person called and was near tears and said, "Thank God you answered the phone." And I'm like, did we do something horrible? Did her order, like she had the most important clients ever and it got dropped on the floor or something? She said, "I just got a new job and I was entering you guys into my bookmarks on my new computer and I thought it just said that there was no such domain." Well, it's ezCater, letter E, letter Z, cater. People sometimes type it as ezCater because the Z and the X are next to each other. And so she had entered ezCater, which wasn't being found. And so she said, "Thank God you answered the phone because I remembered the phone number." And I thought, this is loyalty. This is important. And I came to understand if you have, even at the beginning, you just have a small number of customers that are rabidly loyal to you, you have a shot at a business. And so we took that and went out and started raising more money. And it just snowballed from there, because the rabid loyalty from the people who make your flywheel spin is important. It's the business. This is the business that I've built several, and I've been part of a number of other companies. This is the business that has grown by far the fastest. Once we figured out how to do it, we were doubling, more than doubling, or doubling every year, 8 years in a row until COVID. And it gets harder and harder to double when you get really big. But at $1 billion, we were still headed for doubling until COVID. And it's because, I believe it's because of people who would call you almost in tears because your service, they thought that your service was well.
That's great, thank you. Wayne Fitzpatrick asked about the factors that determine when you make a product or service pivot. Ultimately, it's disappointing customer sales, but are there earlier signs that provide the red flags or red flashing light? I can read, I promise. So, Dries, I want to take that with you, because I think as an open source platform and all the other things that you've done under your banner, there's a lot of products and a lot of services that come out of what you guys create. So, maybe you can take a stab at that.
Yeah, it's a good question. I'm not sure about the best answer, but I do think it's about measuring the outputs, which is sales, at the end of the day. And I mean, for us, we had a lot of conviction about what we were doing. We knew everybody needed a website, and we knew a lot of people would struggle to operate it and scale it. So we had 100%, 200% conviction about that. But we were selling, let's say in 2009, if you go way back to the beginning, we were selling open source and we were selling it in the cloud. And both open source and the cloud were kind of like, were huge barriers. Like people weren't accepting of either at the time. And so, and I say that because we got no, like 90% of the time when we spoke to potential customers, like, no, I'm not ready for open source, or no, I'm not ready for the cloud. Why would I host anything in the cloud? That sounds crazy. But still, despite getting no 90% of the time, like we went from 1 million to 9 million. The year after, we went from 9 million to 22 million. And so it can be deceiving because you feel like you get no all the time, but yet it's okay to get yes, like, 10% of the time or something, and still grow really fast. So I think you have to be careful to measure the inputs, because in our case, the inputs weren't very good. We got a lot of no's, but the outputs, despite kind of bad inputs, were still very positive. So I don't know, I would stay focused in this case. I think sometimes you can measure inputs and you're better off measuring inputs. But in the early days of Acquia, I'm glad we stay focused on the outputs.
Well, speaking of focus, Thomas Snow asks, to prevent distraction, in your experience, when is the right time to raise capital for the first time? Ash, I like that. You just made an exit. So, let's talk about funding and what happens along the way. Like how often that whole.
I'm not sure what prevent distraction means, because, building a company, building any institution requires resources. It requires people. It requires capital. It requires a level of commitment and mission, and it's an integral part. I mean, this is not building a company is not separate from raising money. It's an integral part of how you build stuff. So it's never too early if you believe. And it's back to your question, it's about the scale part. It's about the product market fit part, whatever you want to call it. Each stage has a metric, but I don't think you think of it as a distraction. It isn't. It isn't. And too many times, and I've been a VC for a brief while, and so I've seen both sides of the table, right? I've seen when I raised money, on the other side, I invested. And too often, there is this perception of somehow raising money is a separate exercise. It's a non-stop exercise. From the day you found a company, you're constantly raising money. If you're not, it's probably because you're not growing. It's probably because you don't believe you can spend that money and you don't have an adequate market. All of those signs are signs of trouble. So I would say it's never. I mean, just
Well,
like
I go back to the days of yore when you hear about like such and such got offered X billions of dollars and they turned it down, and there's something to be said about like, okay, I'm going to stick to my guns, build our product and build our valuation, and then accept money, or we're never going to accept money. There's different like decision trees. I don't know if Dries or Stefania, you have a thought on this, but actually, like 100% agree with where you're going. I just wanted to see like what the spectrum of this thing.
Yeah.
I find there's a big difference between if the money is to find the product or find the product or find the market, or if the money is to scale. You've already figured it out and now you want to scale. We have almost, I would say virtually all of the money we've ever taken in was to scale. We figured out the product on very short dollars, like hundreds of thousands of dollars, which was and a lot of foregone salaries and stuff like that. And so our money came in to scale and made it, I think, easier to raise. Now we have a business that can do that. If you're building a molecule, you can't. It costs $1 billion to get to a molecule, but it's a different problem. But if the businesses you can bootstrap to at least get to where you've proven your value, proven the value prop and gotten the first turning of the flywheel, I think those are the ones where you have a lot more opportunity for your own creativity to let loose, and you have more you stay closer to your customers longer if you haven't brought in a lot of money at the beginning. I've done this in a couple companies, and I think that bootstrapping early on is a good idea. Now, it happens that the kinds of problems that appeal to me are ones that you can bootstrap. I don't know how to build a molecule, and I'm not interested. But there's people who do, or even some complex piece of hardware or something that you need real development dollars. You need R&D money. I just don't gravitate to that. But
absolutely.
Dries, do you want to add something? I don't know.
Yeah, I don't know if there's a good or right to that question. I think it's in some extent a personal preference too. Like, do you want to, build a smaller company, or do you want to and own a lot of it, or do you want to go after a big vision that requires a lot of capital and you're comfortable having a smaller piece of a larger pie? And I don't know, some of it is personal, but I would say I think you're more likely to succeed as a business when you have access to capital and enough capital to make some mistakes along the way. So I'm in the favor of raising money early and always having enough money in the bank personally, and going after a big vision and building a company that has a big worldwide impact. For me, that's a gratifying thing to do. Yeah. But for other people, it might be having a bootstrap lifestyle kind of business, and nothing wrong with that either.
So we bootstrapped until we really understood how to scale. And since then, I've raised $322 million. So I'm a fan of bootstrapping and I'm a fan of raising at the right time. And thank God, when COVID hit, we had 80% of the funding that we had raised a full year earlier still in the bank. Mm-hmm. And that's what has kept us going. We've been growing. I mean, we're growing quite well now. We've really come back, but we've been doing it all on money we raised 2 years ago.
You can't grow without some international capabilities or prospecting. And Stephen Goodman asks, can you speak to your international footprint and some of the early strategies around a global business? So how did you think about expansion outside the U.S. or wherever your territories were early on, and how did you think about it later on?
Yeah, you want me to take that?
Sure.
Yeah, so I think I don't think you think about it as international strategies as much as you think about it as what's your customer acquisition strategies. Right? In our case, we used to focus on financial services organizations that are predominantly East Coast, and many of them had offices in Europe. Many of them had offices in Singapore. Some of them had offices in China. And next thing you know, you were global. But it was really following a pattern of what's really important to keep this customer delighted and solve a problem for them. And if it happens to be in some other geography, then you start with that versus you don't think of. Now that's one approach, right? I mean, there are other approaches where some people have in the previous company where we deliberately went out and started in a specific country because the market for compliance and certain other use cases was more appropriate in that country. But once again, the target was where can I add the most value and acquire the customers the fastest and keep them most delighted with the value. And I think you just know it. Just follow the customers. They'll take you where they see their business.
It's a little bit like any other investment decision. I mean, let's say you have $2 million to invest, just to pick a number. Like you can decide to invest it in building more products and hopefully sell more of that product in your existing market, or you can spend the $2 million, in setting up a regional presence somewhere else. So you kind of have to weigh it, what you think is more likely to be successful in the long run. So at some point, it becomes more lucrative, I think, to expand geographically than to invest more in the existing product that you have.
And expansion doesn't always have to look like a huge office or anything. I'm thinking about the companies I know that have like one salesperson in Eastern Europe. Like we have an office there, right? So there's
or even a channel partner, right? A lot of resellers, lots of partners. You don't need employees.
We probably have time for one more question, and I'm going to go to Isabel Plante. I think it's Plante, but at least I like to say it that way. Can you talk about how you navigated the transition from a small team to a big person organization and the challenges of rapidly scaling culture, unblocking teams, keeping focus while still delivering? What pitfalls would you avoid if you did it again? Stefania.
Yeah. So we went from 2 of us to 1,000 of us before the pandemic. At first in our own houses, and then in 4 offices around the country, U.S. and Paris, and two in U.S., Vancouver, British Columbia, Paris. The culture remained very strong. We had articulated the ingredients in our culture recipe, which really are our values. We live by them. We really, we ask you to leave if you cannot live by those values, and we hire for an ability to do your job. You have to have the hard skills for that, and the soft skills that match our values. We are remarkably not a cult. We are remarkably diverse in our personalities, approaches, and so on, but we all share these values. And by continuing to live them, and by refusing to believe that getting big, you have to dilute your hiring criteria, you have to dilute your beliefs, by just refusing to do that, we have kept the culture very strong. We're much smaller now. We're about half the size. Thank you, Toby.
Yeah.
But we know that we can get back, and I expect we can then double. We can be 2,000, 3,000, 4,000 people, and I see no reason why we can't not only keep the culture but strengthen it. When we got to 1,000 people, I actually thought our culture was stronger and safer than when it was few, because everybody had made themselves a steward of it. And if you are sure that you open the mindset of each person to that's part of your job, then you can really keep it. A very wicked smart chief people officer said to me once,
I was wondering who's going to do it.
Culture comes from how information gets shared and where decisions get made. And if you keep to whatever set of rules you use, that whatever you articulated for the way you want to share information and the way you make decisions, and if you continue that as you get bigger, you resist the temptation to, become the emperor or empress in the corner, and I'm special and I'm important and I'm going to pull all the power to me. If you continue to do what you did at the beginning where you distributed it, it will stay.
Right.
It's very intentional, though. You have to work on it.
Well, thank you all for all these amazing words today. Hi, Devin.
Yes, this is a marketer's dream. You guys just crushed this panel. I have extreme gratitude for all of you. I learned so many things along the way. My notebook is full, but unfortunately I do have to push us along because we've got breakout sessions starting imminently, and people will be directly pushed to their breakouts automatically. For those of you that are joining us again from yesterday, you'll note that these things are automatic. You're going to get pushed to your breakout. But for your second breakout today at 11 a.m., you're going to want to go over to your agenda and select the breakout of your choosing. With that, you should be pushed to your breakout imminently, but I want to say a big, big, big thank you to Stefania, Dries, Ash, and Chris. This was a masterful panel. There's lots of live tweets out there that they're gold. So thank you so much. And everyone have a great time at the rest of Boston Reconnect today.
Hey.